Hi, good afternoon and welcome to CNBC-TV18's Mumbai newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Our two experts today are Vijay Chopra of EnochVentures.com and Kush Bohra of KushBohra.com, who'll be answering all our queries. So gentlemen, thank you very much for joining in. The first query that we have comes in from Ahmedabad, and on the line with us we have Shailesh Singh. Hi Mr. Singh, good afternoon. I believe you have some investment in LIC?
Correct. I got around 84 shares of LIC at an average price of around 905. So my objective was to get the listing gain, but now it seems that everything is in red. So I don't need the money as of now. I am okay to hold it for some time if there is any chance of capital recovery. Or else should I bite the bullet and exit out of this stock?
Okay, sir. We'll have your query answered. Vijay, first to you. Fundamentally, for a person who's willing to stay invested for the long haul, is there reason enough?
Good afternoon, Sumaira. I think that LIC at these valuations looks very, very interesting and very enticing, if I can use this word, because I think that this company is still one of the biggest players in the life insurance space, and one of the best players in a very homegrown kind of a company. And even in the villages, in tier 2-3 towns, the kind of reach LIC has created in the last 4-5 decades, it's really noteworthy. So I think that at these levels there's no point of selling and going away. If you can average around these levels, I think that 800, 850 is quite possible on LIC, and but again, it is going to take some time. India is a terribly under-insured country, and LIC is here to stay. So I think that at 900 levels, definitely it looked expensive, but at around 640, it doesn't look expensive at all. So I would recommend that he can average around these levels, and maybe exit around 850, 900 when it reaches there. So he can bring down his buying price. So this could be the strategy.
Okay, that's one way to look at it, sure. Kush, I know it has a limited chart for you, but nevertheless, do you have a view on it?
Well, I do, from whatever limited data is available, plus also combining something that the gentleman already said, that he actually bought it for listing gains and he didn't see any. Probably should have exited a long time ago. That's how stop losses should ideally be put in place. However, technically speaking, the stock is trading very close to its recent lows of 650, 645. Now, if it goes below that, we could see some more selling intensifying. The stock's never really been able to conquer its 20-day moving averages also pretty comfortably. So I would suggest, since it was originally a trading bet, have a stop loss, even if it's a slightly deeper one at around 600 levels. If the stock does breach those levels, then look to exit, look to switch into a different trading idea.
Okay, so Mr. Singh, that is the advice for you, that you could look at averaging with a long-term view, or you could look at switching out as well. By the way, the market is now at the low point of the day, and amongst the stocks which have hit 52-week lows is also LIC. So maybe, after all, a good day to average over here. Okay, and of course, the market, the nifty, sensex, both the key indices turning negative also for the year. But let's answer some more queries, because naturally there'd be quite a few worried investors out there. So the next question comes to us from Kerala, and we have Loganathan K, who has written in. He says that he has 742 shares of Lupin, which he has bought at 927, and over 1700 shares of Excite at 167, and 200 shares of Tech Mahindra at about 1406. He wants to know if he should remain invested for the long term, or what should he do at the moment? What should be his strategy? Kush?
Sure. Let's take Lupin first. I mean, a lot of investors did try to do bottom fishing, but every time the bottom just kept falling lower. So no point trying to guess what the stock will do. It's been in a long structural downtrend. Could continue. There are some signs of revival, but again, nothing too meaningful and nothing to write home about. I would suggest, if you want to stick to the pharma sector, switch to something like a Cipla or a Sun Pharma. That'll be a better bet. Excite, he's gotten at a very, good price. Even though the stock is slightly, below his buying price right now, the trend actually is quite intact. Nothing to, worry about. But even then, I would suggest a trailing stop loss of 152, and here the targets would be 178. Well, as far as the IT sector goes, Tech Mahindra, the stock also has been in a downtrend. Any attempts of revival were sold into, and that's been the case with most of the IT stocks. Here, I would recommend a switch to a KPIT. The stock's already been in the news over the last couple of days, and it's seen a very steady run up. But we expect this momentum to continue. So a switch from Tech Mahindra to KPIT Tech.
Okay, Vijay.
Yeah, so I think let's just talk about IT first. Then I'll take up pharma. So IT has been battered lately, and we've seen the kind of damages which has happened in all the top bigwigs, whether it's TCS, Wipro, Infosys, or HCL, or even Tech Mahindra. So from a high of almost 1850, it is down around 1030 odd. So we have already seen a damage of 800 odd rupees. But I think that, if it consolidates around these levels, I don't think that there is much downside from here, because, we have, heard a lot of noise now. And I think that, whenever such things happen, when there is too much of pessimism, it's great time to buy great companies. So I think that, Tech Mahindra should consolidate around here. But yes, I would also recommend a stop loss of about 950, keep a stop loss. And stay invested, because you never know whether when the market starts rebounding, you cannot time the market. So I think Tech Mahindra is a great company, but yes, keep a stop loss and stay invested. The second stock you mentioned was Lupin. Again, it's a pharma behemoth. I think that pharma, we've seen that in the last 1.5 to 2 years, pharma hasn't participated in the rally at all, and Lupin is a very strong company. So again, I would recommend stay invested with a stop loss of 600. And I think that, once it starts moving, there are good chances it can go back to 900 odd levels. So finally, you mentioned the stock Exide. So Exide also has corrected quite a bit. But I think that, one should stay invested in this as well with a stop loss of 150. So don't worry at all. These are great companies. We've seen a decent rally in the entire auto space. And once, we see the stock turning around, it can again go back to 190, 195. So stay invested with a stop loss. And I think that, there is money to be made in Indian markets.
Okay, fair enough. Next query is also on pharma stocks. So let's just take it up over here. Delzeen Dastur has written in from Gujarat. He says he has 25 shares of Cipla at 950 and 15 shares of Dr. Reddy's at 4,000. So he is seeing some minor gains right now, but he wants to know if, this can translate into major gains at some point. Vijay, these two stocks, how would you rate them within the pharma pack?
These both are pharma behemoths. These are large cap companies. And we have seen that, there are times when large cap companies stay sideways or, they stay in a correction mode. But I think the consolidation has happened for a good number of months now. So I think that, Dr. Reddy's and Cipla both, I would recommend both the companies. They are great companies to have in a portfolio. So all you need is patience. The returns would definitely come. I'm damn sure that, the pharma index would start moving around, upwards, and we'll see gains coming in pharma sector as well, because it hasn't participated in the rally at all. And it doesn't happen that, quality companies do not participate for a long time. So it would turn around, and both the companies are good companies, portfolio stocks. Stay invested.
Okay. What about you, Kush?
Well, I completely agree with Vijay here. Both these stocks are, good picks, and what's even better is that, he's got it at a very good rate. Both of them he's got, gotten at very good rates. My suggestion would be ride this momentum that's just begun in, some of these pharma names. Cipla, I would recommend holding with a trailing stop loss of about 1,000. Here, the targets would be 1,200. Even Dr. Reddy's, the stock is a bit volatile. Cipla is much better placed than Dr. Reddy's, but I would suggest hold on to Dr. Reddy's as well. Here, have a trailing stop loss of 4,120. The stock could, very well see, much higher levels from here. In fact, as high as 4,300 as well in the coming days. So ride the momentum, but have a trailing stop loss in place.
Okay. With that, let's get to our next query. Pradeepan M has written in from Jammu. He has 200 shares of SpiceJet at 81 odd. He's making losses right now given the continued decline that the stock has seen. So he wants to know whether it's wise to, even remain invested, or could things turn around from here. So first, let's get a technical view on this. Kush, what is your target on SpiceJet?
well, it's on the lower side. Unfortunately, that's how the stock's been. So the stock's taken a base, made a base around 3750 odd levels. That would be the first level that I would watch out for. I would suggest, SpiceJet at the moment is a no-brainer. I mean, if you have a trade, please exit. If you want to stay within the aviation space, the only bet you could go to is Indigo right now. If the gentleman wants to stay on, then have a very strict stop loss around 3750 levels. But if you wouldn't mind the additional 2 rupees, then please switch now and move to Indigo. That seems to be a much better bet.
Okay, I had guessed that Vijay might have a longer answer. So Vijay, over to you. What is your outlook?
Well, I think that we've seen the damage already. So there was recently there's been a lot of news flow regarding SpiceJet, and we've seen that they have sent 80 pilots for a 3-month leave without pay. And the DGCA has continued its ban or its stay on 50% capacity till October 29. Now, mind you, this is the festive season. It's really heavy traffic on the airports, and if the ban is till 29th October, so they lose most of the Diwali and the Durga Puja and the other festive traffic. So I think that I completely second the thought that there is a good possibility still lying with Indigo, because they are the largest in India. They have the largest market share. And when there are problems coming into any company, so whether it's SpiceJet or any company for that matter, so let's stay away. I know that it's painful to book losses, but again, if you want to recoup and you want to stay in this space, so Indigo is a better option. Otherwise, I think that there are other companies as well. Go into the consumption space. I think that with the festive season around, there would be a lot of buzz around good companies. So I think we have recommended APL Apollo pipes to our customers. So you can switch to some other quality company and recoup the losses.
Okay, with that, we're going to take a very quick break right now, but keep your eye on the market, because there is pressure that continues to build over there. So we'll track all of that and also answer some more queries when we return. Stay tuned. Hi, welcome back. You're watching Your Stocks, and it's, we still have our 2 experts with us, Vijay Chopra of EnochVentures.com and Kush Bohra of KushBohra.com. So we have more queries that have come in. Mausami Das has written in to us from Asansol. She has 45 shares of Praj Industries at 381 and 20 shares of Amber Enterprises at 2200. She's a long-term investor and now wants to know, should she remain invested or should she consider exiting right away? Kush?
Well, first up, congratulations to her for entering these stocks and at fairly decent prices. She's making a good profit in Praj. The structure looks promising. The trend is upwards. If the horizon is long term, let's say about 2 to 3 years, you should most definitely hold on to this one. Here we're looking at targets at about 500 and 525. Similarly for Amber, my only suggestion here would be that this is slightly weaker compared to Praj, but even then gaining traction. Have a very strict stop loss at your buying price. So in case the stock prices slip, you would exit at no profit, no loss. So have a strict stop loss at about your buying price, which is 2200. For the long term, the stock could run up to 2500 and 2650 levels in the coming few quarters. So rather right now, just hold on to both these stocks.
Okay, Vijay, what's your recommendation?
As far as Amber Enterprises is concerned, I've studied a trend in this company, that as the winters approach, you buy this company. As the summers approach, you better sell it, because they are primarily into the AC manufacturing business, and it's a good time to buy stocks for the next season. So Amber, I think I completely agree that it's a good price entry price. So keep a stop loss of 2100, a bit deeper, and stay invested for at least 5-6 months. I think that once it starts moving up, there's a good possibility it crosses 3000. As far as Praj Industries is concerned, yesterday also Prime Minister has mentioned about the ethanol blending targets. So Praj is one of the companies which is into machinery for manufacturing biodiesel and other stuff. So I think that the requirement for the ethanol blending and the biodiesel is going to increase. So I think that it's a long haul stock. So keep invested in this company, and there is a good possibility that it might touch even 600 rupees if somebody holds with a longer term perspective. So it's a good, fundamentally strong story. Balance sheet is good. The story is good, and India has to increase the ethanol blending, and they have to reduce the dependence on the fossil fuels which are imported, because when we see the dollar coming at these levels, it's going to be a big problem. If at all the war stops and Russia starts and we do not get the discounted crude from Russia, it is going to be a big problem for India's balance sheet. So I think that Praj Industry has a very good story associated with it, and stay invested in this company. Fundamentally, it's very strong.
Okay, up next, Revant Maheti writes to us from Kerala. He has 1,300 shares of NMDC at 140 and 340 shares of TCI at 300. He wants to know what are the future prospects of his investments and if there is merit in remaining invested. Vijay?
For sure, yes. NMDC is one of the largest miners in the country. It is the government. It's the Government of India company. Fantastic company with a very good dividend yield. Last year, the dividend yield was close to 12-13%. Another story is that within a few weeks, we are going to get a demerger in this company. The Nagarnar steel plant is going to be demerged, and there's going to be a value unlocking of 35-40 rupees, which I think that it's going to be a great opportunity. So even for investors who have not invested as of now, they can get into the stock around 125, 127 levels, and post the demerger, it's going to be a very lucrative thing. But I think that all the mining companies should do well with a longer term perspective. So NMDC is definitely a great buy and a great hold. So I would recommend definitely that you should hold on to the stock. The other stock you mentioned was TCI. Again, it's a good company into the logistics space. Stay invested. I see around 850 levels coming if somebody holds with 6 to 12 months perspective.
Okay, Kush, how would you rate both stocks, and what is the upside that you see here?
Sure. Slightly divergent views on both of them. NMDC looks like a good entry point now. Unfortunately, he got in at slightly higher levels. That's where the targets come for the stock, which is around 140, 145 zones. Multiple resistance levels around that zone. What is encouraging is the fact that the stock is in an uptrend, and he could actually see his cost price or maybe slightly higher prices also coming. He doesn't need to get out of the stock in a loss right now. Hold on, 145, 140 zones are where he could look at exiting the stock. TCI, technically much better placed. Here the stock is actually in a pretty decent uptrend after a long phase of consolidation. I would suggest hold on to this stock. Here we could see levels of 900 and 925 in the coming days. So hold on to both, but NMDC you might have to exit at cost, and a good opportunity to book profits in TCI in the coming days.
Okay, the final query today is coming in from Pune. Gayatri has written in to us. She wants to invest in Pyramal Enterprises. Given the correction in the stock from 3,000 to 900, she wants to know whether it is the right time to be investing in it now. Kush?
Well, one word answer, no, not yet, because the stock's been sliding quite sharply, and it's not been able to find a bottom or a support zone yet. The stock does take support at around 930 odd levels, but nothing too meaningful. It's just some ray of hope in all the downturn. I would suggest don't wait for lower levels to enter into stock just because it's fallen so much. Once the stock turns around, crosses its 20-day moving average, we see some technical strength, is when we can look at entering, not at the moment.
Okay, Vijay?
Well, one of the reasons why the price fell was that it was a stock split. So it's now 2 rupees face value. Earlier it was, I think, 10. So this is one of the reasons why we are seeing a sudden drop from almost 2,000 rupees to 900 odd rupees. It's a demerger, sorry, extremely sorry, it's a demerger. But again, all the finance companies are facing a lot of pressure, especially what happened with Mahindra Finance yesterday. So I think that these companies are going to be under some kind of a pressure. But again, I would say that keep a stop loss of 905. If it breaches that, get out of the stock. Otherwise, stay invested.
Okay, gentlemen, thank you very much for joining in and for answering all the stock queries sent in by our viewers. With that, we're going to wind up your stocks on the news that it's an over 900-point cut on the sensex right now, and the Nifty bank is reeling under a 1100-point cut. But we'll leave it to the team of Closing Bell to track all that market action and the last hour of trade. Thanks very much for watching. Stay tuned.